All right, we are live. It is about 11:59, so we're going to give everyone another minute or so to get logged on. But if you are on, welcome. We are excited to talk to you today. I love this. Can you guys see my screen okay? I love this. Oh, good. We have Nicole, too.
Hello.
She's connecting audio. Hi, hon. So good to see your face. I miss you so much. It's sad. I miss everyone. I just miss humans and interaction.
I 100% agree with that statement. 100%.
Every month we do this, and every month I'm like, oh, I'm so over it. And every month it gets worse and better.
Are you guys at the office at all?
Lisa
we just started back. Yeah, we just started back last week. We're kind of doing a rolling thing where brokers are in Monday, property management's in Tuesdays, Thursdays. Everybody's kind of a little bit all over the place.
Oh, got it. So not all week. They're only coming in and working in the office on Mondays and then they're going back home.
Right.
Got it.
We're just trying to limit the amount of people that are in the office at the same time.
Yeah.
Which makes sense. How about you guys? I see you're still in your home office, but
this is my office. So I never left because it was only me, Emily, and David the entire COVID time. And so I figured, well, we're 6 feet apart from each other. So we've been coming to the office the whole time because I can't work from home. But now we have all of us here. So the team is growing. We have 15.
Nice. I saw the new guy, but can't wait to haze him.
Yep. Yeah, I'm super excited. And we've got another person joining us. Hopefully 2 more.
Awesome. Well, that's exciting. Let's go ahead and get started. It's right about 12 o'clock on the hour. I see quite a few people still logging in, so we'll give everyone a minute. But welcome. My name is Lisa Schroer, investment specialist at Atlas. Jennifer Reinhardt, the investment queen and analyst. And our lovely and talented, amazing lender, Nicole Ruth from Fairway, is also joining us today. So welcome, ladies. And gentlemen, I will say. So this is normally our women's event. I paused on that one to let it go for a minute, but it is kind of our women's event, obviously being via webinar these days. Everyone's welcome to join. We've also opened up several new markets. So we have people in Seattle, California. Jen is actually coming to us from Salt Lake City. She's out there doing a scouting trip, looking at properties to buy, and we're looking at opening that market. So we're all over the place. Our attendees are all over the place, and I guess this is the new norm, right? We're talking about how much we miss being in a room together and human interaction, but I don't know if that is going to be what we all go back to. But I do know one thing, and the girls can back me up: using real estate to achieve financial freedom and build long-term wealth. Doesn't matter where you are, what's going on with COVID, this works. And in fact, it works through COVID. It works through the downturn. What were you talking about, Nicole, this morning? How stressed out you are from being so busy? You want to talk about that real quick? Kind of give us a quick market update as we roll into the beef, meat and potatoes here.
Yeah, really quick update. I mean, so we had unemployment came out on Friday, which kind of knocked around our 10-year treasury, which made our interest rates pop up Wednesday, Thursday, and Friday with all of the good news with people returning back to work. And now, of course, that's just the first wave. It's the low-hanging fruit, those people that were furloughed that are needed back, all hands on deck. There's still a lot of people that are still at home waiting to either be called back in or having to find new jobs. So, but the market's reacting. It did react very favorably. Today, the stock market's not doing as well. In turn, our interest rates are improving over last week's swing for the minus. But overall, jumbo loans are back. CHAFA and all the down payment assistance loans are back. Non-QM is coming back, which means those bank loans where you use the rental income only to qualify, those are coming back. So I'm really excited about where things are headed and seeing that market kind of open back up again, especially for our investors.
Absolutely. Gosh, I can't even imagine how busy we were the last couple of months without all these lending options and programs. Like, we're talking about taking Q3 off and going sit on a beach somewhere, but I don't know if that's gonna happen. So awesome. Here's our agenda. Jen, you want to kind of go through what we're going to talk about today?
So we are doing this event just to talk with other people about how do you have both time and money in your life, right? Like if everything is really busy and you're working, how are you able to take care of your kids and yourself? And it's just not possible, right? So you have to have passive income, you have to have mailbox money, and how do you get there? And how do you do it right now during COVID? And what are our stories? That is why we're here today. So these are our whys. Me and Lisa are both single moms, and we both work in real estate and are investors and work with investors. We work with a diverse group of people. This is just our family dynamic. So the main thing that I needed in my life was balance when I was trying to take care of a newborn and a little child on my own. It's so hard. It's so busy. And that's without working. Anyone that has stayed home with children knows that it's harder than actually going to the office and working. So, you know, at that point, when a while back, I couldn't make it on my own, but could you make it on your own, right? Can you work and take care of your kids? And how do you do that and save for college for your kids? And how do you take care of someone in your family if they're sick on top of everything else and still save money, right? So it's hard.
Right. I love this slide in particular because obviously we've been doing this webinar for about a year, and everything on the left is what we would talk about before COVID, right? Here are problems to solve. And we sat down and like, well, how has COVID changed what it is we're trying to solve? And you can see it hasn't. In fact, it's exemplified needing more resources, more passive income, and more ways to get income, because not all industries and jobs that we all thought we had that were safe are. So if you are a restaurant worker or a personal trainer, like a lot of my friends, or work in some of these non-essential businesses, which that I don't even know what that means, but you need a more concrete way to create wealth, to be able to support your family. And everyone needs a roof over their head, right? This isn't the financial and the housing crisis that happened in '08. This is a global health crisis. So now more than ever, we need more creative ways to create passive income. I should also real quick, I forgot to kind of do some housekeeping stuff in the beginning. If you guys have any questions at all, please feel free to put them down in the chat or in the Q&A. We will answer them live. We are here for you guys. We want to cover all your questions. So anything that we say that you want more clarification, doesn't make sense, you disagree with, agree, questions, throw them in there and we will get to them as we go. So, sorry, Jen, back to you.
Okay, so this is my personal story. In 2008, that's when I had my son, and you can see his little picture on the left-hand side. I also have a daughter with cystic fibrosis, and that year I found myself suddenly single. I have an ex with a whole bunch of issues like most single moms do, and I was trying to work, take care of my newborn child who was up every 2 hours, and my little girl who was in and out of the hospital, and it was just too hard. So what I ended up doing is going back to my little house. That's the only thing that I really had. It was 1,100 square feet in Centennial in a cul-de-sac in the Cherry Creek School District. The payment is around $1,000 a month, and I still couldn't do it. It was really hard. So I ended up needing to move next door to my best friend so her and her husband could help me raise up the kids while I was working. And I had to keep my little house because it was the recession, it was underwater. And that's how I ended up with my first rental house. And that's not really sexy. And I wanted to be a big apartment investor, but it was just life then, right? Like, who wants to sell your house when you're underwater? And what I found out was that it wasn't that hard to rent the house. The bills were paid. I started rebuilding my credit. I got into a community that I loved. And I've been a real estate agent for a long time, but during that time I wanted to work more like 9 to 5 hours so I could have the weekends with my kids. So I started learning commercial real estate and then blended them. Atlas actually bought one of my listings cash, and that's how I met Atlas. Got in, started learning how to help other people invest. And when you learn how to help other people invest, you do it yourself. right? Because we don't have people do something that we don't do. And then I started to do it on purpose, learning what makes a good rental. So I jumped houses again and again and again. And now we live in King Carroll Ranch in a really nice neighborhood. The first 3 houses pay for the 4th house. And with the real estate, I'm able to have both the time and the money, right? So when my daughter got really sick, I was able to take a month off to go get some international medicine for her. She has cystic fibrosis, which is a fatal lung condition. Most people with CF live into their 30s or 40s. And with this medicine, she was able to clear like all of her infections. And this year they came out with a better medicine. So it gave her that time. And I wouldn't have been able to do that without my investment income and having control of my own time. So it's just been really important for me in my life.
I love that. Real estate has literally saved your daughter's life. I mean, I just wanted some passive income and to be able to make it on my own, but everyone's why is different and everyone's why is valid. And I love your story. So
Nicole,
thank you. Thank you.
I didn't know if I could get into Littleton. I was like, I have, credit issues. I have this ex, my income is kind of weird because I'm self-employed, and she like figured out all of the pieces. And thank you, Nicole, for doing that, because you helped me jump to my 3rd house. So.
Oh, Nicole took all of my hot mess, and it was a lot, and got me into 3 homes in 12 months. Okay, 2 primaries, do the math, and I'm on my 3rd. So there's literally no amount of shitstorm that we can't help you clean up. Okay, and that leads me to my story. This is a much longer version, but here it is. Had it all. Lost it all. Literally married a wonderful man with a lot of money, came from old family money, which you never think could go away. I did everything right by society standards and God and my mother, and white picket fence, 2.5 kids, literally BMW in the driveway. You couldn't have made it up. And we lost it all. And so I found myself completely on my own, starting from scratch in a lot of debt. And there's those moments, and I talk about this a lot, but there's these moments you find yourself, for me at least, like on the bathroom floor, crying uncontrollably, just, totally helpless. And you're not really sure how you're going to get through that day, let alone the next and the next. And it's a moment that you have to make a decision. Am I going to be a product of my circumstances, or am I going to rise and thrive? And I absolutely love and hate everything that's going on in our country and our world. Right now, there's a lot of uncertainty, and we can lean in. We can lean into the uncertainty and the fear and be scared and go into a hole and blame everyone else, or we can do the opposite, right? Which is emerge, which is rise and thrive and learn and grow and do the work. And it's hard. Work is hard, whether it's financial freedom, being a better person, ending racism. I mean, combating a global pandemic, like not sure what we can do there, but we're staying home. We're doing everything we can to take care of ourselves and our health. Why wouldn't we fight just as hard for our financial freedom? And it took me a long time to get out of that mindset and into a growth mindset. And it's not easy. Here's what my journey looked like. It was literally about a year ago that I happened to be in Nicaragua with this wonderful family who owns Atlas. They're friends of mine from college, and they had taken me under their wing and taught me everything that I know, and certainly everything that they know. And Ryan said, hey, look, you can't work anymore. I was working 3 jobs. You don't have any more hours in the day. Let's work with what you do have. And for me, it was real estate. I owned a home in Wash Park, kind of on accident. Like Jen, I didn't get into real estate intentionally to grow wealth in the beginning, but I had this asset, and I had a bunch of lazy equity in that, which means equity that you are not using to its fullest potential. Maybe it's going to continue to grow at 2 or 3 or 4, 6%, but I can pull that money out and do better. And I did. I started with the very beginning at just Airbnb my house. I mean, literally that's all I could do was, I couldn't get qualified. I couldn't get a loan. So, hey, I could move out of my house and go stay with my friend Jen for the weekend and make money. And I literally cleared $15,000 last year in 8 weekends. So there's so many ways that your home can work for you and create more income. Then I created enough. I had been at my job enough and created enough time where I could get a loan. So then I could get a HELOC, a home equity line of credit. So I actually pulled money out at 6%, which is absurd now, to buy my next home. Bought a little primary, moved in it for 6 months. It was lovely. Moved out. Now I rent that and that cash flows, right? And then I did it again and again. And it's amazing how real estate will continue to feed you if you know how to play the game. If you know what the rules are and how to manipulate the situation to your best interest, you really can create something from nothing. Now I have clients that have hundreds of thousands of dollars in the bank, and that's wonderful. And we can get you investment properties that way. We have clients that have nothing in the bank and that we're coming out of debt like myself, we can get you a property. So there's no, that's not an answer that we like at Atlas. Between us and Nicole, these fierce women here will figure out a solution for you. And here's my how, here's my real estate, the first house on the left, about the second, and now the third. And honestly, my goal is 10 properties in 10 years. So my kids are 10 and 12. When my youngest is out of the house, hopefully, I will have enough passive income to go live on a beach somewhere or work part-time or travel or whatever it is that I want to do. Real estate provides options. And I love it because we talk about wealth a lot, and right, it's good to pause and kind of talk about what does that mean to you? Without fail, there's always a man that will raise his hand and say $1 million in the bank. And that's great. Is that wealth? Is that enough? Is that enough to retire? Not with Nicole's shopping habit. Just kidding. I love cars. She loves, clothes. Everybody loves something. But for me, I love time and options. And I don't want to work till I'm dead. That sucks. So real estate provides more than just tangible wealth. It creates time and options, and you can't replace that. So back to Jen. You want to give us your top 3 success factors on how to kick ass as a real estate investor?
Well, we'll get into these in more depth, but you want to find someone that already knows how to do what you want to do. And that's the key. It's also the hardest thing because our blind spot is what we don't know, right? So find someone whose lifestyle you love and ask them to teach you, right? You have to believe that you can do it. And then, so what I do is I make kind of a vision board, and then you have to actually do it. And we'll get into this in
Yeah, how did you find your mentor?
I found Atlas on accident. Like I said, I had moved next to my best friend so that I could have some help raising my kids. However, when I saw how these investors were getting more and more properties and they were appreciating really quickly, and so then they had all of this money, I was like, hey, I can do that too, right? I can do that too. And so when I found Atlas, they kind of taught me how to do this, and I started doing it for myself. So it was pretty awesome. What we do is we will help you find the properties. We can help you manage the portfolio, and we know what makes a good deal. So when I bought my third house, I knew that a 4-bedroom, 3-bath would rent better than a 3-bedroom, 2-bath, or, you just learn different tricks of the trade. So.
Mm-hmm. And we'll dig into the numbers and the details more here in a minute, but just on a high level, what's the second part?
On a high level, the second part is you have to believe that you can have a better future. So this is the part that's kind of hard because when your life looks a certain way, you have to envision it a different way. For me, when my son was waking up every few hours because he was a newborn and my daughter was sick, it was just really easy to think like, why did this happen to me? Why, did my partner have to turn out this way? My life kind of is over, right? Like, so you can spiral in your head, and that can be true, right? I could have just stayed there. I could have decided that my daughter was just destined to die, right? Like, you can just choose these things. It's very easy to stay in that loop. Or you can say, this is what I need, and this is what I want my life to look like. And then if a choice during your day doesn't align with that goal, then you don't do it, right? I'm learning more and more as I get older that your brain is a supercomputer, and what you put into it is what it will do, right? So you have to learn thought stopping and then creating a vision of what you want. And it's hard, but it's fun, right? So.
Right. What is the famous quote? Whether you believe you can or you believe you can't, you're right. Mm-hmm. So I think that leads us to our third. And this is really great. I love how Jen brings so much of her heart to everything we do. We do a very similar presentation to traditionally men, and we don't talk about any of this stuff. We don't talk about fear and vulnerability and all these things, but this is how women speak. This is how we connect, and this is how we understand investing. We'll get to the numbers and the graphs and the charts and all that, and we love that. Like, I literally live in Excel all day long, but we have to get there, right? How do we get from A to B and then move towards that C and D and Z when you have financial freedom? So Jenn is my guru, my life coach guru, because I'm like, just drill and kill, let's do it. And she's like, no, let's talk about our feelings, which are equally important. So, all right, go ahead. What's the third success factor?
You have to overcome the fear and recognize resistance. So the way that our brains are set up is to keep us safe, right? So anything outside of our experience, it's going to push back on, like, oh, that might not be safe. So when I was thinking of investing in real estate and moving to Littleton, which I thought would be a really nice lifestyle for me with the mountains and the biking and the schools and things, even my family didn't want me to move because that's scary. And what happens if you have 3 mortgages and all of them are vacant and you don't have any income and you have no support and you fail, and then my mind will go, and then I could lose my job and I'll be homeless under a bridge and all of these things, right? Like, you spiral and spiral. And so you have to recognize that is just resistance. It's just your brain trying to keep you safe, trying to keep you from changing. That's why it's so important to know someone that has the life that you want. And you'll be like, well, are they sleeping under a bridge? No, they're not sleeping under a bridge. So I don't have to either. And you can know these things and still struggle with it. So recently with COVID, all the sports camps shut down, right? And so now I'm working from home. My son is now 11 and he's playing video games all day because he doesn't get to go to sports camp. And so what I did was I actually designed my house and Airbnb'd it and then traded it to be in Salt Lake where we want to expand, right? So I can look at the properties here, but I'm also right next to both of my best friends who can care for my son during the day. And while I was doing that, I'm like, well, what if I get somebody into my house and it's trashed? Or what if my house breaks when I'm gone? And, all of these things. And you have to just keep overcoming resistance. There's not like, oh, I've done that, I know what it is, and I don't have to deal with it anymore, right? So it's kind of fun.
Yeah, absolutely. There's the power in overcoming fear. So let's talk about how it works, right? We kind of talked about the why, we kind of talked about our stories, but here's how the Atlas investment philosophy works and why it works in a good market and why it's designed to work in a down market. So our top 3 things, right? One, is it a 20-year market? Do we believe real estate in Denver is going to be worth more in 20 years than it is today? Absolutely. Phoenix, absolutely. Salt Lake City, where we're opening, absolutely, and some other markets. There's a lot of people, some on this call and some that come to us from all over the country, that say, I have a great deal in Alabama I want to buy. I have a really good friend right now that literally just brought me a deal that's in Kansas City, right, kind of in Overland Park, and it's $60,000 and it gets about $4K in rent. And on paper, that's like a 7 cap. And we'll talk about cap rates and kind of all that in a moment, but there can be really good deals on paper, but you need to look beyond just the numbers, especially if a broker is giving you a cap rate. Be careful, because I think brokers are like teenagers. If their mouths are moving, they're lying. So be careful. So one, is it a 20-year market? And we'll dig into that. What makes a 20-year market? This is my favorite question. Path of development, okay, is the third one, but they kind of play together. What is the net migration? Not immigration, but migration. Who's moving to this particular market and why? What's the diversity of workforce? If oil and gas goes out, Houston's done. So that's why we don't invest in Texas. California, where I'm from, they have rent control on the ballot. That's never something that's going to work well for our model. So understanding all the ins and outs of every market is number 1. 2, cash flow. It has to cash flow. We talk about cap rates, and that's your net operating income divided by the purchase price. So the higher the cap, the more cash flow, regardless of how you finance. So 2, does it cash flow? It has to make money now, it has to make money later. And 3 is that path of development. Okay, that's the sweet spot. Do you know that this particular neighborhood is going to gentrify, or how is this going to appreciate? What's the story around it? We're in Denver, so we can talk about specifics like the Anschutz Medical Campus, the Gaylord Center, areas like Rhino, when at the time it was Mayor Hickenlooper, said, hey, I'm going to give a tax break to people that want to develop here, because this is a key area of Denver. When people come to visit, this is their first impression. We need to lift this area up. I thought he was crazy and absolute asinine, and I'm the first to admit I was completely wrong and should have bought real estate there 10 years ago. So understanding that path of development is that key. And then under all those things is absolutely what makes and breaks a good deal: property management. We manage everything that we buy. You're welcome to manage it yourself, but why do you want those 3 a.m. calls? We manage it, underwrite it, find it, everything for you. It's truly like a one-stop shop. And our management team is the best in the business. We retain the best tenants. That's how they're actually compensated. So there's less churn. It's literally what makes this machine work. We manage over 3,200 units in 5 markets. So these guys really know their stuff. So when we're vetting a deal, market rents are really important. You need to be right on the money, right on the number with how much you're going to get in rents, so you can accurately calculate your cash flow. Jen, Nick, anything to add to that?
I'm losing my voice today. I would absolutely have to second the fact that the property management is key. I've got investments I've never even seen. You guys find them, I finance them, you put the tenants in, you manage it. We have always had, what's shocking to me and shocking to a lot of people that I tell is that none of the tenants missed any of the payments during COVID, because you guys jumped in, you educated, you talked to them, you got their stories. I mean, that is huge. A lot of people right now can't say that, and it's due to the active management.
How many units do you have now, Nicole?
24.
24. And don't worry, I've seen your properties.
I'm so glad, because I still haven't.
That's awesome. That is helpful. So like what Nicole was alluding to is our collected rents are still very high and on par with pre-COVID numbers. I think we're only down less than 5% across all of our markets. So that's really good. And it is because of our relationship with our tenants. We've created a resident resource manager. We're just very innovative. We're small enough that we're able to move people around and create roles when they're needed, keeping tenants occupied, working with them, rent retention. And this isn't new to us, right? These guys have been in business and doing this long before the 2008-2012 crash, like Jen alluded to earlier. When you're underwater, it's like stocks. You only lose money if you sell. And our model is buy and hold. Okay, it's not get rich quick, it's get rich slow, but it works. It's not sexy apartments and syndication and all these things, but it's slow generational long-term wealth. And it absolutely will withstand this downturn as well as any others to come because of the asset class and how we buy and why we buy and what we buy. So why Denver? Jen, you want to talk to us a little bit since you're physically in another state right now, scoping out our next market?
So the biggest thing that we want to look for is having both the appreciation and the cash flow. In California, in Seattle, in New York, you can get appreciation. However, you're paying into that asset every month to make it work, right? So during the time that that asset is getting paid down, you are underwater. And right now in Denver and in Arizona, in Utah, you can buy an asset, either break even on a 15-year note or put it on a 30-year note and cash flow several $100s a month. For me right now, I want to be around more when my kids are young because it's just me. And so I'm more for the cash flow, whereas people, so that I can have time, right? People that have a high income or a good job, they can put all of the money back into the asset and get it paid down, in 15, 10 years. And what is cool is that these little apartments that we find, they're about 4 units. You can get into them for between 3 to 25% down, depending on if you're willing to live in them for a while. The market rents are around $5,000 a month. So when these are paid off, you have $5,000 a month forever. And in 15 years, the market rent is going to go up, right? So it's hedged against inflation, if that makes sense. So when I talk with our investors, I say, how much money do you need to retire? Whether it's 5,000 a month, 10,000 a month, 15,000, 20, you know, I'm doing it in 5,000. And some of them are like, well, I want 50 times 5,000. I'm like, what are you going to do? You're going to buy an island? But you can really do that. You can get, it just takes 3 little apartments and you have 15,000 a month. It's scaled to inflation forever, right? Did I say that right? Does that make sense?
Yeah, absolutely. And if you guys have any questions, this is usually where we get a lot of specific questions. Some people that are in Dallas, Seattle, et cetera. So if you guys have any questions, throw them in the chat box or the Q&A, and we'll make sure to get to them as well. But yeah, I mean, why Denver? Why Arizona? Why are we in these markets is a really important question. And also, why now? What is happening now, as in today, as in this month, as in this year, right? What's happening in the market? And it's changing daily. I mean, it's changing hourly, right? Nicole, like every week we come out with a new update. If you guys don't follow Nicole Ruth from Fairway on any social media, she does amazing market updates every couple of days or so. And I watch them religiously. It's pretty much the first thing I do in the morning. Forget CNN and CNBC and all those guys, right? I'm like, what does Nicole say? So here's the deal, right? Supply and demand has shifted, and it's happening literally daily, right? Supply was down, but so was demand. So they were down proportionally. So it really didn't necessarily change. Was it a buyer's market? Was it a seller's market? And it also depends on the price. When the jumbo loans got more difficult to acquire, everything that we had over that 570 mark had less options. They had less demand, so therefore they're sitting longer. Days on market's higher. Anything under that 570, 400 range, it's flying off the shelf because everybody wants to get into those houses while they can still afford them, while they have jobs. And also everyone wants to move, whether you're sick of your home, getting divorced, having another baby, getting out of an apartment. There's a lot of energy around moving right now, which normally it has a negative connotation. Historically low rates. I mean, money's free. We just had a call this morning. We're like, rates can only go up. So there's nowhere else to go, right? This is it. This is the bottom. Buy, refi, HELOC, cash out, gift letter. We'll get into all those. But Nicole, I see you nodding. Do you want to add a little bit? Yeah, give us your 2 cents.
No, I mean, I was really hopeful that we might see some things. The Fed had said some things that made me think that rates might actually go a little lower. Some things are coming out along with what I said earlier about the unemployment, but also some things are coming out with FHA and Fannie Mae and Freddie Mac that make me think that the rates are actually going to start going higher. So you're absolutely spot on. I think the rates only go up from here.
Awesome. So the next question is great. How do I get started, right? Do you have $100K in the bank? Because that's generally about 25% of our $400,000 to $500,000 quads. Yep, great, buy. If you don't, what do you have? What can we work with? I didn't have anything. I had debt and student loans and a crazy ex and this crazy mess, and I had a home. I didn't even realize what lazy equity meant and how that I could turn one home into 3 with $0 out of my pocket. It was amazing. So if you have money, great, we'll help you. And if you don't, that's okay. If you own a home, we can help you. And if you don't own a home, we can help you. What are the 3 things, Nick, that you need to get to buy a house?
Nicole.
Oh, I'm sorry.
She's too busy laughing at me. I was
Listening
saying, what are the 3 things you need? I'll tell you what they are. Income, down, and credit. And you can usually work with 2 of the 3 of those. I love her. I mean, I know you're not on mute.
No, I was totally listening. It just didn't register. Hello.
Anyways, that's okay. So if you don't own a home, let's get you into it. House hacking. That means you buy it as a primary, you live in it, you rent out rooms for however long, and you move out and you do it again. Now that house is now making money. That house is cash flowing, and that cash flow helps you get approved for the next loan. Maybe it's a little bigger, maybe it's a duplex. And all of these options just roll into creating wealth. There's the first-time home buyer programs are back. They suspended Chapter for a little while. It got more complicated. That's back. FHA is rocking, right? What are some of the other things you're seeing, Nicole, for getting into like first-time homeowners?
No, everything. I mean, the CHFA is huge. That was a win. MMA, CHAC, the 3.5% down on a 2, 3, or 4 unit is phenomenal for helping people be able to get into, you know, something that's we can use the rent to help them qualify for. And then just the willingness to move, such a game changer.
My parents gave me a hard time. They were like, you're like a military family because you keep moving. However, now they say you have so much stability because you have equity in your home. So if you ever needed it, you could get it out and you're okay because of your home. So it kind of flips.
Yeah. And the Denver market keeps appreciating. What a great place to be in.
Absolutely. And it doesn't matter if you're young and getting started or older and getting started. Almost all of our parents, us included, as well as everybody at Atlas that got into this, did it against their parents' best judgment, because it's the rich dad, poor dad. Most of us have traditional dads. I mean, our boss's dad is a financial planner. He said, don't get in real estate. It's too crazy. Put your money in the 401k and do the traditional method of retirement. And that just didn't work. And his dad, bless his heart, came back to him, and he was about 60 years old and said, okay, Mike, I don't think I have enough to retire. Will you look at my portfolio? And we started buying his father property at 60 years old. And it's never too late. Now that property, they bought enough rentals that then paid off the mom's home. So when the dad passed away, now she doesn't have a mortgage. So that's her peace of mind. It doesn't matter what your individual goals are. Real estate is a means to achieve them. Your goals don't have to be the same as ours. Ours is to own a bunch of property and live on a beach and not have my children homeschool ever again, okay? Maybe your goals are different. Maybe you love homeschooling and want to open your own daycare homeschool. Great, we'll find you a house that will suffice for that and that allows, the zoning allows for that kind of craziness. So great, we have some questions coming in. I'm gonna look at those. We've given Nicole kind of a chance to talk, but any other questions you guys have about lending? Any other programs that are new? Anything else that you want to kind of catch us up on?
No, I think now that the program's actually back, where if you don't have a job or a situation, and we're going to see some of that, where we can actually use the rent coming off of the property, the interest rates are going to be higher. It's going to impact cash flow. It's going to impact cap rate, but it is an option to help some people to get in. And then when they do have those job situations, we can do a refinance. So it's about just being creative. I mean, the whole team that works with me, we work with so many investors. We're blessed to be in this market that it sharpens our saw every single day.
Wow, well, you were pretty sharp before this, so I can't even imagine how you're going to come out of it. Honestly, you guys, this is the best team in the industry. If you have any questions about getting qualified, what the next steps are, please reach out. We'll send the recording out if you guys are interested. We'd love to meet with you to kind of sit down and go over your goals, your investment strategy, and how we can all help you. There's no fee. It's not a program. It's not a subscription. It's not even a consulting fee. We do this because we love it. Someone did it for me. Someone did it for Jennifer. Nicole's just naturally gifted and brilliant, so she figured it out on her own. We all had mentors that helped us, so it's our turn to mentor, the next generation. Like I said, regardless of your age or where you're getting started or how much, mess you have, bring it and we will help you. So any final thoughts, ladies? I know we went through kind of quick today. We're getting pretty good at this, but we'd love to connect with you, hear more about your goals, your story, and then kind of create a curated way to help you get there.
And I would add, I mean, you guys, Jen, Lisa, you're so brilliant and you're so giving and it's the same, here I am, 51 years old, 3 college kids, 2 of which now own homes, thanks to you guys, right? And to see that and to be able to give back, you guys give passionately, you give freely. And if everybody on this call should be calling you up and just saying, can I just have 15 minutes of your time? Will you just share with me, even if it's not now, even if it's a year from now, 5 years from now, creating that plan and creating that vision is what makes it happen.
And
awesome.
My parents both have investment properties now.
Do they? That's awesome. I didn't even know that.
That's awesome. Yeah.
All right, so it doesn't look like we have any other questions. We will let you guys go. Please feel free to reach out to us if you do. Again, we're just here to kind of serve your needs and share our knowledge and our stories. And if we can move the needle a little bit on financial freedom and creating, generational wealth, then that's our goal.
Love that.
So, oh, I have a question. Keep talking, girls. Can't figure it out. There we go. Thank you. You're welcome. All right, you guys. Everybody have a great day.
Bye.
I mean, I might be getting a little delirious stuck at home with my children. Like, if they don't go back to school soon, someone's going to lose their mind. I know, and this is me not washed yet. Watch out. All right, guys, everybody have a great day. Be safe. Take care of one another. We'll talk to you soon.